Topic of my talk would be how to find the right partners or who needs banks anyway. Um, so it's a bit tongue-in-cheek, but the reason I'm pretty confident about talking this topic with a little bit of humor is I've been in traditional finance and software development for more than 10 years. I used to be a management consultant with Bain& Company, a vice president at MasterCard, one of the most traditional, at the same time, one of the largest fintech companies in the world. I used to be a COO at one of the neobanks in Europe, and I'm currently a member of the board at one of the Ukrainian banks. So I've been leaning into the traditional finance and the larger banks and the traditional infrastructure. I still feel there is a way to bridge between the startups and traditional finance, and the key goal of my talk would be around trying to give some snippets on how to actually build that bridge. So, as some of the people might think. The startups, the large startups that exist in this world, and the ones we actually are knowledgeable about and probably are using on a daily basis, the likes of Stripe, Coinbase, Square, or Robinhood, all of those fintech startups share one common feature. They actually have nothing to do with banking. So they are primarily tech companies, and the way they build themselves, they actually use what is often called an invisible bank to power themselves, to basically build their tech on top of what the traditional banks have to offer. And we'll talk a little bit about what exactly a bank can bring to fintech and what exactly a fintech could bring to a bank. So the names on the left-hand side of the slide, like Cross River Bank or Celtic Bank or Sutton Bank, probably doesn't ring any bell to people who are not deeply in the fintech space. But actually, these invisible banks are the ones powering the fintechs and helping them build the regulatory bridge into the finance world by being, the licensing elements to their technology and being often the balance sheets and helping those fintechs thrive and grow. So those three banks, which probably none of the participants or very few of the participants would have heard about, are actually behind the success of the likes of Stripe. So Stripe is a financial technology company, with tech being more important than financial here. And the banks like Cross River, Celtic, or Sutton, many other banks, in fact, they power those fintechs. They help them with their license, with the balance sheets. So in fact, we shouldn't be too afraid about banks. We shouldn't be intimidated by the fact that they're large and financially stable and huge and well established. They actually are as eager to partner and work with fintechs as are fintechs to work with banks. Another fun fact: even some of the largest digital banks in the world are often not banks. So one of the largest neobanks in the world, called Chime, primarily focused on the US market, having 15 million customers, are actually explicitly not marketing themselves as a bank and do not possess a financial license. They're just using their technology to help customers manage their money, manage their accounts, and live a generally healthier financial life. Same goes with Revolut. So few people know, but actually out of the 20 million customers that Revolut has, only probably half of them are working through Revolut's license, which has been granted in Lithuania. And the number one market for Revolut being the UK, they're actually not a regulated company, not a regulated bank there. So they're just, again, they're using their technology to making the life of ordinary customers, ordinary people easier, and don't necessarily strive for a banking license or a banking charter. Definitely not in the US, where it's extremely complicated. Another example could be a company called Wise, formerly known as TransferWise, which enables financial cross-border transactions between people and businesses alike. And having 16 million customers, they're actually not a bank. So they're present in probably 80, 90 countries, and only in few of those geographies do they possess any type of license. And in none of those geographies, they actually have a banking license. So as Bill Clinton once said in his campaign, in his presidential campaign, some of the people who are older in this call might remember that. It's the economy stupid. Actually, it's not the economy, it's the technology. So often the technology is what is important in those digital fintech solutions, not the actual license. License is just a key that helps you unlock the door, but what you're going to do with all those customers and your product offering is entirely up to the founders of those fintech companies. So I think whenever anyone thinks about what is the path forward in terms of licensing, what is the path forward in terms of building the product, one should probably ask themselves, the founders should ask themselves, which of the two are they in fintech? Are they the fin part or are they the tech part? So despite the slightly intimidating financial element in fintech, the actual products that we enjoy on the daily basis are just the tip of the iceberg, which is built on top of the many things which are provided by partners, often licensed partners, which have been in the market for tens of years, even hundreds of years. And the actual product that we see is the technology, the user experience, the features, the business features that we built with our product, and not the more or less commoditized offering among many elements in financial technology, like accounts or cards. For some of the blockchain or crypto banks, on-off ramps, acquiring for everyone, KYC and AML, cloud solutions, and much, much more. So, probably no one, whenever starts to think about the products, would think about building the cloud themselves in the beginning, right? So everybody would just tend to use either an Amazon cloud or Google cloud and some other cloud. Nobody is thinking about building that. So I think the common misconception for launching the solutions would be, oh, I need to go and fetch the license. In fact, what I think the founders should think about and the entrepreneurs should think about is, what is actually my core? Is it the finance or is it the tech? And often the answer is, it's actually the tech. And if that's the answer to your core question, if tech is what you're trying to market, in fact, then a path forward should be by building your core, building your tech, your envelope, your product offering, rather than building all of the infrastructure around it. And one should be great at something very specific, and this is what differentiates products. Nobody is differentiated by the fact that we have Amazon Cloud or Google Cloud. This is just infrastructure. So whenever thinking about building a fintech product, one should probably start thinking about, what's the product offering? What are the elements that would attract customers? What are the features that would be interesting to my prospective customers? What is the business model? Rather than, oh, how do I get a license to operate as a bank in any particular geography in this world? So by asking the question, what is my core? What is my actual product about? I think really thinking about this and answering this question would help any entrepreneur or prospective founder to be more focused and more specific about what is actually important for the product. Now, with that being said, it's still impossible to build anything these days without the proper partnerships or the proper vendors, proper solutions to sort of be that under the water part of the iceberg. So the way I suggest some of the entrepreneurs should think about partnering is, it's more an art with little snippets or elements of science to it. It's more about building the right partners or finding the right partners, rather than trying to apply the very specific science. And the methodology that I would advise some of the people to use whenever choosing a partner would be a DAISY technology. So The DAISY approach would be about five key elements. So the first element is doing your intelligence. So probably the idea that you have in mind is novel, but not novel enough for anyone in the market not having to thought about it before. So probably there are companies in this world, products in this world, who've already started to build something very similar to what you're doing. But by doing your intelligence, by trying to study what exactly are they using in terms of tech, in terms of partners, is probably a good first starting point to understand what is it that you need to approach, what are the partners you need to approach to ensure that your product is going to be powered by the right partners, powered by the right infrastructure. The A in the DAISY stands for avoiding the vendor locks and minimum fees. Since most of the solutions in the fintech space and most of the partners in the space are the software as a service companies, a lot of those products, a lot of those solutions will try to create what's called a vendor lock. They will try to make sure that it's quite hard for you to sort of change the vendor whenever something goes south, or they're trying to impose the minimum fees onto you. In the very beginning, when you're just starting your product, you're just testing the market, you're just trying to find the product market fit, it's always better to go for a pay-as-you-go approach and try to avoid vendor lock by any means necessary. The third element would be around involving the tech experts. So sometimes the price of the services might look very attractive, and that price might try to sort of push you towards choosing this or that particular vendor. At the same time, there are many aspects from the technical standpoint, and I'm sure some of the panelists are going to cover that in the following sessions, would be around specific load requirements or specific functionality that the service either can or cannot offer. And those examples could be a make or break situation for your particular product. So trying to involve a tech expert to look at the API, to look at the functionality, to look at the ability to scale that solution would be essential in trying to find the right partner for your particular product. The S element, the fourth element in the DAISY approach would be to solve for TCO. So TCO stands for total cost of ownership. So whenever large companies are buying something, they often are looking at TCO, which is a total cost of ownership, not only the sign-on fees or ongoing fees, but also support fees, some of the mandatory elements of the product or mandatory payments that some of the products would impose on you. So be careful, look into fine print, look into the contract quite specifically. Don't be too excited about this one number which the company are going to provide you with. Be very diligent in the way you choose your product partner, and be very diligent about how you calculate the total cost of ownership. And the last element, but I think it's actually the most important, is you as an entrepreneur, you as a founder, you know best what's good for you. So whenever you feel that the partner you're working with somehow isn't a good match in terms of either customer service or contracting, or you feel you've hit the wall in the negotiations, maybe it's the sign that something isn't right for you, that maybe this isn't a right partner for you. And you should be really, really conscious of the fact that the good partnerships, they usually start good. And it's very, very rare when something is starting not ideal and then suddenly becomes ideal down the line. To summarize what the DAISY approach is about, it's about building fast, building your technology fast, use the proven solutions that are in the market, but contracting quite slow and be very diligent about the partners. To come back to the banks, I think the way to think about the banks is they're neither enemies nor friends to fintech startups. So the way to think about the banks is, I guess, quite straightforward. There are several things you can do with the banks, and actually should do with the banks. And there's certain things you shouldn't be doing with the banks. So one of the elements, which is essential to every business, is opening a bank account. Even Coinbase, a crypto exchange has a bank account. You cannot avoid that. So start with a simple thing, open a bank account with them. If you're a lender, you can always look into using that bank's balance sheet to build your lending business. Often banks are looking to leverage their balance sheet and find alternative uses of their balance sheet through lenders. So if you're in lending business, one of the partnership allies you could be looking into can actually be trying to use the bank's balance sheets to help you with your lending business. Another element, which has been illustrated by one of the earlier slides, is trying to partner with the bank. Sometimes what you're offering is really complementing what the banks are offering. In this case, the bank would be interested to become a partner of yours and actually going to help you with all the regulatory and compliance infrastructure, which they're really good at. They're actually really good at maintaining their compliance infrastructure and regulatory infrastructure. And usually the bank you'll be partnering with is going to be 100 times or 1,000 times larger than you guys. And therefore, you can leverage their huge size to help you bring your business to the next level. Some of the tricks, tips that things that you shouldn't be doing with the banks, you shouldn't be under communicating the way you're going to manage your account. It usually ends badly. So if you want to maintain a healthy relationship with the bank, be upfront. Tell them the way you're going to use your account. Don't try to undercut the bank. Usually they'll have a deeper pocket than you guys, and this is going to end badly for you. You shouldn't be looking down on their tech either. So those banks, the traditional banks, have been in the market for dozens of years, if not hundreds. They're like grandpas. Show some respect to a grandpa. They've built their business. They've grown for all of those years. You should be respectful of the way they've built their business and they spitting out those returns year on year. Don't try to bend the rules. Don't try to be smart with the bank. Usually the largest asset of a small bank is actually their license. So trying to bend the rules on either customer onboarding or transaction monitoring isn't a good idea. Overall, just try not to eat their cake. Try to eat the cake which you can share. And this is a good approach with any bank. So I guess this concludes my presentation. Whoever is feeling like a consultation could be in place, or you might be looking for an advice on building a fintech business, feel free to connect via LinkedIn. The QR code is going to lead to my profile. We can connect, and I'll offer a free consultation on the matter for sure. At that, I'm going to conclude my monologue, and I guess going to hand it over back to Johan for any questions that might have had.
Yeah, thanks, Andrei. Any questions? Feel free to post them now, or wait until the end of the session. Let's see. I have a nice Q&A tool here. I don't see any open questions. So yep, I guess we'll save that for the end of our proceedings, and move on to Helen Petrachuk, who's going to discuss the financial frontier, digital versus crypto banks. Helen, why don't you take it from here and introduce yourself closer?
Great. So starting with my presentation, and I would like to start with intro. I think to present myself, my background. So first of all, thanks for joining this event. So it was idea to have like experts on one place and to talk about first of all about issues or questions that could be relevant for startup founders, for companies that's interested in DeFi and banking. So it's more like a vivid discussion, trying to cover in all aspects, of launching your fintech startup. And thanks for having together like today all our experts, and having on this webinar our partner from Dana Research company. So my personal background is mostly dedicated to blockchains, as I'm going to cover topic about crypto banks. Till our M&A, I was leading a CEO company, Fire Labs. Now it's Fire Group Holding, because we are doing and working both in blockchain and banking in traditional finance. Also, we are working mostly in Nordic regions, as we have pretty close relationship and building, we call it FinTech Innovation Network in this region, having a lot, hosted a lot of events, interesting events in Sweden. And I could say that I'm like building this bridge between startups and VCs and companies that already they have already built some interesting products in this domain. So my topic will be dedicated to crypto banks. I want to highlight because this is very, I could say, vivid discussion right now, because there are more and more crypto banks emerging in the market, and want to clarify what kind of crypto banks existing right now, what trends are right now we could forecast and or see right now in the markets, and some interesting statistics that probably will be relevant. First of all, I want to start about crypto banks. What's the definition and what's the difference between traditional banks, or digital banks, we call them. So the main difference, first of all, that the banks that can provide the same services like saving money, withdrawing money, sending to another users, also like hosting accounts for B2C, B2B users. Just the main difference is they can work with crypto assets, not only with fiat. And the main point here that there are two types. We could in general divide them into like the main blocks. First of all, it's like crypto bank purely, that we call it as crypto bank, or crypto friendly bank. And a lot of even banks that Andrei showed on his pitch, we could call them crypto friendly banks, because it's like like traditional banks that just got crypto license, and then they can help you to conduct crypto transactions. You know that even like Deutsche Bank and big banks that already applied or already got license, they can also work now with crypto. So, and we can call them crypto friendly bank. Purely crypto bank, what's the main difference is like just they purely working with crypto assets. And there are a lot of such examples. Normally it's we could say exchanges that purely working with cryptos, or it's like purely we could say DeFi project that working mostly on smart contracts without fiat part. And in general we can divide them I think in 5 groups. Let's focus on each of them. It's like traditional banks that I mentioned that got like crypto license. Deutsche Bank, for instance, this year they applied for crypto license. It means that even such big players, they are considering crypto acquiring. And I think next year the same will happening. So we will see more and more traditional banks that will apply for for crypto processing. The same with BBVA Bank. Crypto native bank, it's like banks that also they have crypto license, but Kraken and some like here samples. For this, Kraken is like in general it's like crypto exchange. They have around 13% of turnover in the world of crypto exchange turnover. But already you have option then to exchange your crypto and get it how it in fiat format. Also there are like crypto banks with crypto license. We can also divide some crypto platform like Gemini, but in general Gemini we could also call it as exchange. It's like US based company founded in 2014, but they also providing right now like banking banking, let's say, services. And tendency will be that big crypto exchanges, like in general, they will become like in general crypto banks. So they will provide all like services like in general a bank that can hold like your crypto and fiat assets. So regarding the also the last group, it's like in general we can call them super apps, with in general providing huge amount of like services. And now it's getting very popular. Nexo Bank, let's call them, pretty big bank. They providing both services for B2B, B2C users, and in general, it's not only like exchange services, crypto fiat, but also a lot of additional services, like staking services, a lot of services related to businesses, and we can call them like super apps, because they're huge amount of functionality that they're providing, and covering not only like B2C users but also B2B. In general, if you want to operate as crypto bank, again, you also need to think about license, crypto license. And I would recommend you strongly to go through our report. So we've done very huge, I think, like research together with our partners, and research company about region, and specifically each country in this region, how to apply, and what institutional entity responsible for providing you the specific license, and what kind of license do you need, and how it's called, to from legal perspective to operate in your country, and work with cryptos. I don't want to focus on this in detailed way, but because a lot of countries that we we provided in this report, so you could go through it, and I would strongly recommend you to do it. And also want to, here is like you could see like crypto banking landscape, what kind of banks right now in general divided into crypto native banks, in crypto, or like banks that already have crypto license. But want to show you, first of all, you see that traditional banks right now here are provided that already got crypto license, like BBVA, like Deutsche Bank that I mentioned, and also ING Bank, and more banks we will see next year, because this year a lot of big names already applied for crypto license. So it means that they will be doing crypto acquiring for the users. Such banks, like if you've seen reports from Revolut and N26, is pretty popular here in Europe right now. They are earning money mostly on crypto acquiring, not as traditional banks right now, and definitely other like say competitors see this, and more and more think about providing also additional crypto acquiring services. And by the way, it's not only like exchange services, it's also related to staking services and a lot of additional services. And a lot of super apps we can call Coinbase as like super app, providing huge amount of right now services, and as mentioned, so we can call traditional like exchanges now as crypto banks, because in general they provide huge amount of services, and they could work now with fiat and with crypto, provide the exchange services, provide you physical digital card that you can use and pay in fiat in different countries. Want to focus first of all on crypto bank core. What is like in general, what is crypto bank, and how to build it? Why specifically focus on this part of like from our group? Because like to launch like exchange or super app, it's very like complicated. But let's start from something more obvious, and what kind of like requests from startups we do have. In most cases, it's like just to launch the core of CryptoBank and then on top of it to add more and more services, because such services, such kind of projects, they could be launched like step by step, because it's ecosystem that you are developing. In general, it's like authentication part. Yeah, it's when you using some kind of KYC process in an integration with third-party providers, general like management of profile of user. Very important part is in general it's wallet core that can work with fiat part, and part that can work with in general, yeah, that you could use your like account to send fiat money to another users, and MPC, this is part that's responsible for key management system, especially for crypto part. And I want to focus on this model a little bit and closely explain about this model, because it's very important how to implement in general, then third-party integrations, because if you have in general your wallet, you need to have also like provider for like or payment gateway who will be first of all covering all fiat transactions and any kinds of integrations with such kind of providers you need. You also need integrations with exchanges, which will be providing liquidity. It could be both like DEX or DEX exchanges. Also focus on it, why some companies using DEX and DEX. And in general, like back office. It's like, I could say, at least MVP of CryptoBank that you need to consider to launch the market and in general test your idea. Regarding the private key management system, it's very important that there are like two ways on implementing this part. One way is like, let's say you're writing your own like custom MPC system from scratch. It means that you write all on your own backend pool systems that will manage the private like general keys of users on your end. In such way, you're taking huge risks, because you need to assure high security for your users, and I would say that just big companies can afford to do it, instead of using third-party companies. But let's say third-party companies, what I mean, it's like companies that providing custodial wallet solutions like Fireblocks, Web3 or Hextrack. There are a lot of them. But for example, Nexo Bank that I provided sample, it's pretty big bank, well adopted. A lot of like I think a lot of people already heard about this bank. They using Fireblocks for as custodial provider. And when we're talking with a lot of like startups, they just afraid to use like third-party providers. But we explained that in such way they provide guarantee of security for you. And big names, big companies, they're working with such leaders as Fireblocks. And not only Nexo Bank, you will be surprised that a lot of samples that we like in our report and in my presentation provided, they're also using such kind of providers. Normally they are taking like setup fee for startups. If you're like founder of startup that you want to launch your CryptoBank, coming to them, they charge you a setup fee. It depends from like 10K to 25K. And also charging then depends on the number of users and number of API calls that are going to happen. So it's like fluctuate, I could say, billing, but again, it's faster, more secure. You don't have full this headache about security on your end. And it's not bad at all solution to consider. Regarding building your own MPC system, it's your choice. We also explain about all risks potentially. You're not paying then to third-party provider any kind of setup fee, any fee for API call. How to implement it, by the way, it could be done even based on some low code. For instance, we also have low code system that and it could be used potentially to build your MPC system. So it's like more here like a decision based on your tech team, but as mentioned, so big banks a lot using like third-party providers. So this is the same, just explain that in general, like two ways. You're using like third-party provider for MPC system, or you're building own one that will assure the key management system. By the way, I also recommend to consider Finrax company. For instance, they providing full system responsible for custodial part. So they already integrated with Fireblocks and also exchange part. So they already integrated with a lot of exchanges, and all this, like I say, model could be integrated to traditional, let's say, wallet, fiat wallets, and they will cover all this, like I say, functionality. Also, want to focus on trends and very interesting trends. And I would recommend you strongly, probably after our webinar, we'll send you some links to read about MPC wallets, because it's emerging trend right now in crypto banks. Right now, for providing like the highest level of security, because if we talk about crypto bank, it's more about security. Banks tend to use such, we call it MPC custodial like wallet solution. For instance, Fireblocks company also providing this option for the users. What does it mean, and what is the main difference? Probably you also heard about machine Enigma, that were commonly used by Germans in within the Second World War. The same, it's also like method of encryption that used, let's say, and for instance, only intended receiver will understand the message that was sent to him, and the same principle is like basement for encryption that is used for MPC wallets. And commonly right now it's getting more and more popular, because such kind of encryption and in general this method of cryptography could provide high level of security for the users going to use such kind of wallets. For instance, Fireblocks also providing it. We just want to mention, and other other custodial providers more and more talking about it, and some like big names already having such kind of option on their websites. I will send some links after our like webinar. You will be able to read about it, but it's the main, I could say, trend that we need to consider this year. Also, like crypto bank market is increasing significantly, and expectation that it will be 2.5 billion by 2029. It's significant boost, and you see that even traditional banks are considering to getting like crypto license for crypto acquiring services. So it means that even traditional banks, they're interested. Interesting point that North America, Asia, so these regions are going to be well adopted. US right now is leader, because such big companies like Coinbase and Gemini and other Kraken, such companies, they are established in the US, but projection that such kind of regions will be leaders next 5 years. And also interesting point that crypto banks well adopted in developing countries. Regulation definitely is the main point. In more and more countries, they are adopting like legislation and going to regulate this market. Traditional banks commonly use, and right now services like that could assure the that, let's say, this crypto transaction is not risky. It's like services to know for knowing your transaction that could provide instant reports for the banks. And the demand for such kinds of services also increasing based on latest reports from traditional banks. Normally they're using kind of third-party providers. So this tendency is going, to be in next years. And you see that crypto banks work in tandem with traditional banks. It's also going to happen, and also very important that going to come up new security standards. It's like the same standards that we know CBDC's compliance in traditional fintech. The same standards are going to adopted in terms of security in DeFi space. Also, it's CBDC. Yeah, we heard about it a lot, and even we work right now with leading like protocol on CBDC in Europe right now. You see that more and more national banks, they are interested in CBDC adoption because it could help to cope with corruption and a lot of and make some dedicated payments to businesses. So a huge amount of use cases could be, and like based on statistics, number of CBDC is increasing significantly more. Like overall, right now, 200 already launched different kind of central digital currencies. And it's very important that also usability of such kind of crypto banks are getting improved. You see that in general DeFi space, and there were a lot of stuff related to in general in DeFi and blockchain-based projects to usability. But now it's getting improved, and some more and more crypto banks, they are focusing on usability, on UX UI of their like products, and it looks much more better than it was like even a couple years ago. And also DeFi integration is mentioned that it's also inevitable part. So I would strongly recommend you also to look through our CryptoBank report that we've done within all existing traditional banks and crypto banks, divided them in different categories, provided some infographics, pretty useful. We strongly recommend you to download it, to look through it. Very useful. You will see significant increase here of even new services that existing crypto banks providing right now. How quickly they adding new services like exchanges, like staking services. So I think it will be pretty useful as both for product owners, founders, and definitely you could connect with me on LinkedIn if you're interested to talk more about general crypto banks or in general blockchain technology. Happy to connect and share our experience with you. So thank you, and want to pass my word to Johan.
I think you're on mute, Johan.
Yeah.
There we go. Rookie mistake. Thanks, Helen. Like I said, if you have any questions for Helen right now, feel free to post them. I know I have probably a lot of interest. We can also do it after. So I see there are no open questions right now, so I think we'll just move it along to Peter, the next speaker, who's also managing partner at Fire Labs and also founder of Process Mix Enable platform. So a lot of experience there. He's going to talk about security and tech insights of launching a digital wallet. So Peter, I will let you introduce yourself and take it from there.
Yeah, thank you, Johan. I will try to do this more faster rather than Helen, because again, I'm a technical guy and I don't want to dive deeper in some technical stuff, and just will try to provide my thoughts about security and so on. So about myself. I'm founder of Proxmix, this cloud platform for fintechs. So it means that we provide infrastructure, provide tools to build backend for fintechs, and also to host frontend. Also, I'm founder of Able product. This is product allows to banks to automate all lending operations, such as loan origination system, loan management system, and so on. I have 18 years experience in banking in fintech, and was part of teams to deliver banking solution in the United States of America, in Canada, in big banks, small banks. So I know how fintechs and banking are working inside in different regions, and I see that a lot of common things around even different regions exist. So let's talk first about security, and I want to highlight two different types of security. And first, the security of communication channels. This is super important because all modern applications use two-factor authorization and rely on emails. And this is the first thing that I want to talk about. When you're trying to build some fintech, you need to take as assumption that all emails of all your users were hacked. Just take it as is. So, and keep in mind that this is a reality. And it means that if you try to build something related to email and verification part of email, so this is really bad design. You need to think and find a way how you can use emails just only for notification part and stop using it for any activity and actions related stuff. So email just for notification to send you did this, you made this, and so on. No any part inside 2FA. Try to find any alternative ways to communicate. And in this case, I suggest to take a look into messenger apps, because I think all users have at least one or two different messenger apps. And this is really a really good way how you can create your two-factor authentication by using them. And plus, it will secure your communication channel, because if you be able to send some notification about some security, or I don't know, you'll write some anti-fraud inside your system case, you can just send notification via messenger app and be sure that even if someone possibility to have some access to mobile phone, in this case, your real user still will be able to get this notification. So this is important, and pay attention how you can integrate with messenger apps. This is important. And the last part here is tokenization. So try to use tokens, not real data, in case of communication and sending personal information. So some hash functions and so on. Yes, you still can be hacked. So this is not silver bullet, but still these can help you to make your security like in a different level, because it's really, really hard to understand how to calculate these tokens, how to parse them, how to use them for hacking purposes. So these three for communication channels. How to secure data. So first of all, try not to collect data. So just the best scenario is just not to have a data at all. So in this case, the system will be super secure, because you will not have anything to secure. Otherwise, rely on some stable, secured walls with data. You can find a lot of such services, some QAC providers, some mail providers. These softwares can provide to you secured with best standards in market, such as ISO or AWACS security, so CIDSS, and so on, and keep as much data as possible in this security wall. So it's better to make integrations to get this data. And yes, possibly this is not so elastic and allows you to do a lot with data. But in case of security, this is the number one choice when you try to build your, startup or scale up, but not big enterprise, and you will not be able to pass all these certificates. Next, about GDPR. GDPR is not bad, as you can think. So actually, GDPR allows to bring real good culture inside your architecture. So even if you build solution for not EU market, so it means that you don't need to be compliant with GDPR, still use this approach to design your data layer, to design your API inside, because this will help you a lot when you will scale your solution. And the last point here, so you need to think about your data, like about something that you cannot change. So just take this approach with it. I mean, try to deny even update statements in your data. Just deny it. Try to add everything by insert. Yes, this is easy to say and hard to do, but you can design in this way your data. Just like, I don't know, for example, this is a really good example in case of transaction, right? So you have order book with transactions, and you can keep inside each transaction balance of your wallet. So it means that you will not have any table or data with balance for wallet, but you will be able to find it in case of looking through transactions. And you can calculate it via your database. So it means that even if someone will get access to your API, so this someone will not be able to change your balances at all without creating new transactions. But transaction is a complex one, so this is really, really hard to create a new transaction inside. So this is just like some insights in case of security of your data and channels. And last point, I want to talk about some insights, tech insights. So emerging technologies. And when I'm talking about this, it's not because it's modern. AI and, AI, machine learning, let's talk in this way. You need to edit not only to provide some chatbots or communication channels. No, you need to use such technologies to watch your data, to use your log inside system, because all these tools will allow you to find new features inside your product. Blockchain, not crypto, but just the blockchain. This is like this point number one is similar to point number 4, because blockchain is really, really good solution, for example, for your reconciliation processes. It allows you to make your data consistent. And it's not hard to implement nowadays, but this will reduce your cost of development in case of scaling your solution into different regions, into additional bank providers, payment providers, or currencies. So this technology is awesome here. So don't forget about that. Point number 2. Even if you provide solution, your wallet or some fintech solution to end users, such as individuals, you need to think about API access to this. So try to design your system in similar way as open banking in European Union. So it means that you need to provide possibility to your end users to fetch some data, to send some actions via API access. This will help you to make partnerships with merchants, and this will help you to grow your closed loop inside system. So closed loop means that money will be inside system without any actions, but still will be able to provide transactions such as peer-to-peer transactions between merchants and users. So API is crucial nowadays, and design your system in this way to support this API. Next point here is different watchers. So this point means that in case of IT, really, really hard to add some additional layers to watch your data during, for example, transactions. And you need to add these layers from the very beginning of your implementation phase. This will help you in the future to add some anti-fraud policies, to add cross-sell strategies. So it means that you will be able to do with your data, and the place where you can analyze your data. So yeah, about adding blockchain formation for reconciliation and consistency of data, I mentioned, and I don't want to go in details. So that's it from my side. I said that I will do this faster, but I hope you're not tired with all this IT stuff. And if you have any questions to me, feel free to ask, and we can dive deeper into each of these points and discuss in details. Yeah, Jochen?
Great. Thank you, Peter. Let's see here. Do we have any questions coming up? No, it looks not at the moment, but we'll give you some time to think of great questions, dear audience. While we jump on to the last speaker of this evening, Danilo, who's a co-founder of Actana Research, and he's going to talk about the data-driven discovery, the role of analytics in digital banking. So
thanks a lot for passing me the word, Johan. Yeah, I will intro myself first. My name is Dan. I'm co-founder and CEO of Actana Research. For the last 4 years, we are doing analytics and consulting for startups, mainly in Web3 sphere. So we came from crypto banking first, and then together with Fire Labs, we've developed in 2023 the report and done the research in cooperation with them on the crypto banking and digital banking state of the market in general. And on my background, I'm not that experienced in banking and traditional financing as other panelists. My background is coming purely from blockchain and Web3. After graduation and getting management and marketing BA in Warsaw at Koźmiński University, I started to work on various crypto startups. Since 2017, I've worked on 5 different scale, different product line, different business model Web3 startups, and for the last 4 years, for the last 3 years, we're operating the Actana Research with my partner. For 2 years, I've also been the chief research officer at Layer 1 blockchain, and currently my scientific focuses, let's say, because I'm a researcher at first. I am an analyst and researcher. My scientific focus is now on Web3 products, on tokenization and the way complex token economies work, and the way we could increase survivability of startup, because we see how many startups fail and we want to take part in their development. So yeah, the topic of my presentation would be data-driven discovery. We'll talk about analytics in digital banking, and in particular, we'll talk about 5 different discoveries. The whole agenda is as follows: problem, the life cycle, R&D scope of digital bank, solution, and our solution is in fact the description, rather our view on 5 core discoveries: product, technical, legal, marketing, and Web3 discovery that should be done to successfully launch with as less risks as possible a new digital bank on the market. And next step, what we are doing after discovery. So the problem is, we all know that startup survivability rate is fairly low. 10% of them fail in first year, and 70% of them fail in the next 5 years. That's all startups. Up to 75% of fintech startup fail on the same scope of time within 5 years. And the bottom 2 numbers, 42% of startup fail because of lack of market need for their product and service, and 90% fail because they're beaten by competition. And in fact, those are 61 in total % of potential risks that could lead to our failure that we could almost completely mitigate on the planning and design stage. Because, well, in theory, if we cover all market, if we know all hundreds of our competitors, we know their plans, we know their strategies, we know about service providers, regulatory trends and changes, there is much more risks we could meet during the further development and maintenance of the solution. And also, as we know, the cost of fixing defects is much higher on each next stage. So implementation 6.5 times higher than on design stage, testing 15 times higher, maintenance 100 times higher. This is not the most relevant research. It's research from 2010 taken by a dozen thousand of IT projects that were done in zeros. Definitely for the last 10 years, this number is more balanced. So it's not that much change because we have a lot of tools, we have agile development and other things that lets us to iterate and redevelop. But in general, we could definitely say that when we already implemented something that we could have designed differently, then cost on fixing this something would be definitely higher than on design phase. And in our opinion, our idea, and what I'll talk about in this presentation, we should not more focus, but we should actually always consider to put a significant amount of resources on initiation and planning phase, because those are the phases when we do design and when we create all technical tasks needed to pass to developers and actually implement the solution to execute, then monitor, control, and then close the project after years of its successful development, hopefully successful. And the point are that it's nearly impossible for the team to hold on all knowledge, all best practices that in ideal world, digital bank need to launch on the market. From left to right, what kind of information do we need? So we need to come up with a great product. To come up with the great product, we need to understand market, we need to know what our competitors doing, and we need to do our customer research to see what need could our product solve. Documentation development and documentation best practices, digital transformation. So if you already have traditional bank, what automation software and tools to use. Token economy, if we are going to do digital crypto bank with our own token, or we want to dig deeper in real world asset tokenization, tokenized securities and trading with them or whatsoever, we need to know about tokenization. Marketing and sales strategy, a separate thing. We almost always have see project just going to service providers for marketing, but sales is not definitely something you want to outsource. So marketing and sales that usually should work together. That's also another huge piece of information you need. Technical discovery, technology and tech stack you should use. Integration, service providers and vendors you should use. Legal discovery, strategy development. This all a whole bunch of information we need to launch a bank. And even if we are specialists in this sphere and we launched a couple of big things years ago, 2 years, 3 years ago, we most likely not updating as much as we need to launch data-driven solution, right? Not opinion-driven, because opinion-driven brings more risks. And actually, what we think the solution is to be data-driven, to always not depending on the expertise and knowledge of your team, obviously, like based on them, but not completely relying on them, doing important discoveries, a complete comprehensive product discovery, marketing discovery, technical, Web3 and legal discoveries. And in future slides, we'll talk about each of them and what we should look into when we are doing those discoveries. The first one is product discovery. Each discovery slide will be structured as follows. So we talk about processes, artifacts and insights that this discovery is bringing to us, bringing to our team. The most key processes in product discovery is market research, competitors research, and customers research, because those are all directions you need to go to find out everything to come up with the product offering, which is like the final goal of product discovery, came up with the product offering. So market research, competitors, customer research, market opportunity analysis, innovations and trends, and jobs to be done. It's more second level, let's say. Jobs to be done is where we tie our customer needs with our product. So we actually could see what kind of jobs users are coming us to be done on our platform, bank, solution, mobile app, and we could tie it to make our product offering even better. Innovations and trends, self-explanatory. Market opportunity, that's the result of our market research. We usually should come up with some kind of opportunities for us to go into the market. Business model canvas gaps, what is something we apply to competitors, to market, to our business, but it's just more general business analysis that we use, well, in general, yeah. In terms of artifacts, we should have target audience segmentation, which is partially marketing, partially product thing. But in fact, during customer research, we want to know much more. We want to gain more data, more insights about our product. So we usually have this first part when we ask customer, what do you need? What are your pain points? What do you need? What in general you're looking to? But then we're coming to their pain points of using solutions now, of competitor solutions, and you're coming to their needs, what they're looking to, what kind of job they want to be done. And in this part, we already can segment our audience on people who would use different set of features in our digital bank, let's say. Competitive analysis report, customer journey map. Well, after jobs to be done research, customer journey, half product, half technical thing, but still feature list, user persona, product roadmap. Feature list, pretty self-explanatory, roadmap also, user persona coming from our customer research. Insights we are receiving after product discovery and what actually like our strategic options, what is something that opening for us strategic options after we completed the product discovery. So that's the customer-centric product offering, monetization strategies, product differentiation, which is also, it's very important to stand out in this huge competition in digital market, digital banking space. Go-to-market strategic options, value proposition, and feature prioritization. It's always debatable. Those insights are always product, CPO, CTO, and CEO could debate for a while, because those are actually different kinds of banks you are doing, different kinds of solutions you are doing, even though they might be a similar choices, but in fact, though, they make a huge difference on the whole business. And yeah, what are we looking to when we do the product discovery? So market opportunities and risks. So research reports that highlights what we should be aware of. Outlook of what are the latest innovations and trends on the market. Market size and growth forecast to understand what bit of a pie we could eat from this market. Competitors research gives us understanding on competitors' pricing and product offering, so we could come up with our own competitive product offering and pricing. Sorry for that. And customer-centric solution design references. Yeah, we see Revolut. They're great in terms of UX, UI, and also Monzo N26. We definitely should take into account existing user experience to create even better. And competitors' features. Yeah, all in all, what are they doing? What are their plans? Also, their competitor strategy and plans is what we always prioritize and focus on, because what are they going to do in 2024 if we are going to start like the product discovery in like tomorrow, for instance? We definitely should know what they will do till the end of next year, ideally what they will do within the next 2-3 years. Then we're coming to to technical discovery. The process here: technology research, innovation, trends analysis, technical requirements gathering, infrastructure planning, system architecture design, API design. It's all obviously not a limited set of processes, just as it was in product discovery. Those are just the crucial ones the key ones from our standpoint of view. Artifact system architecture design is the artifact itself, how it's gonna work, microservice architecture, what are we gonna integrate, how we're gonna integrate it, technical specifications document and business requirements documentation, which is required required pieces for any proper development company to start the MVP development, to kick off the development stage. Integration plan, if we understand that we will rely a lot on integrations in our business model. Prototypes, proof of concept of what it will look like in terms of maybe some feature set or user experience, and feasibility assessment, obviously, a very important thing, very important artifact and deliverable of technical discovery is the feasibility study itself to assess and prioritize the whole scope of development for the next years. And insights, what we actually finding out what we could choose after the technical discovery. We understand the technical stack, so its selection is what we could do after the technical discovery. Integration of third-party services after we analyzed, we understand what are the requirements for third parties. We see the list of third parties applicable for us. We could make the decision on the integration with them and priority. Security measures we will use, scalability and performance optimization. Do we need to scale? How much do we need to scale and how it will make it possible? And development timeline, overall development of the project. What we'll look into on the public sources when we do the technical discovery, those are technology innovations trends. How these markets develop and emerging technology markets developing in banking industry. So what exactly is coming next, what we should take into account, what perhaps we don't have experience yet, but we should look for other developers, or we should look for other like outsourced knowledge to do this and stuff like that. The next part is the blockchain opportunities. For instance, if you want to dig into like crypto digital banking, if you want to dig into DeFi services, so definitely what opportunities you have is you should find out all the kind of use cases you might potentially want to implement. You want to do just trading, or you just want to have a digital wallet to allow users to store and other stuff. And tech stack and tools, just one of the visualizations and articles with various options of choice for tech stack and tools to actually build the solution, build the fintech or digital banking solution. Next, coming up, the legal discovery, regulatory landscape analysis, obviously target market, what are the regulatory requirements, compliance licensing requirements, then intellectual property research. Do we need to protect one, or it's there will be no much hurdle for us on this side? AML KYC compliance, what we're gonna use, what AML KYC providers work with the audience we want to work with, risk assessment, privacy and data protection. As an artifacts and assets, compliance checklists, product and user documentation, something legal department always do after it's probably during the MVP development. IP rights, patents, trademarks, copyrights, and at least understanding of how we're gonna work with IP in general, audit report, risk assessment report. On the inside, after the discovery, after legal discovery, looking at competitors, looking at the market and main government bodies that are regulating fintech and banking activity on the market we want to be at. We find out all compliance measures we need, services provisions restrictions. If we cannot serve some services to our customers in particular areas, privacy policies and data protection, and risk management strategies. Also, a couple of screenshots here. Recent news, July 13, about new regulations in Egypt. December, just a week ago, a new digital banking license to one bank in Georgia. If I am building digital bank in Georgia, doing the legal discovery will also reveal some of the competitors that done licensing or done any other legal related thing during the last 1 year. And legal status, also how are competitors licensed, what do they have? That's also pretty important. Marketing discovery, those are segmentation, branding, positioning, marketing channels, research, competitors, campaign analysis, customer sales, funnel development. So those I will just touch very briefly, because on the marketing side, it's something that we not usually do at the very beginning when we launch the solution, right? At the very beginning, product, technical, and legal, something we're more interested into. But in terms of marketing, we should definitely understand how we're gonna position our branding. I'll just jump straight to the insights here. So we should definitely understand our go-to-market strategy, marketing channels and outreach strategies we will use, targeting strategy, our unique positioning and differentiation, what's probably the most important thing, budgets, customer retention, promotion activities we're gonna use. And when we're gathering the information, we are looking the way our competitors position themselves, the way they like this one-lines, slogans, names of their promotion campaigns, how they are managing this, and what kind of audience they're trying to reach. It actually gives a lot of insights usually. Rewards and promotions, how it work in other apps, how it work in other businesses, how we could work with it, and customer data. For instance, when I was preparing this presentation, also in August 2023, there was published a huge research on the customer experience in digital banking in Indonesia. I have no idea how I found it, but it actually a very useful piece for all marketers that are going to launch or work with digital banks in Indonesia. And such pieces, such research pieces, they are abundance of them on the internet, more relevant, less relevant, but yes, they have a lot of insights to consider to develop more successful, less risky project. And Web3 discovery, the last one, that's actually something just we called the discovery. Web3 discovery is, as we understand, the process of getting knowledge about parts of crypto and blockchain world we want to integrate within our banking business. So we usually should, in terms of processes, understand the blockchain integration. If we are integrating blockchain in general, or it's just digital wallet, or we want to do some kind of infrastructure plus DeFi, maybe we'll dig in there. So yeah, Web3 infrastructure analysis, crypto digital asset infrastructure analysis. And in terms of insights, what we're getting from this discovery is digital asset trading integration plan. Let's say most of banks seems to be interested in crypto asset just for the let's say wealth management, investment, and trading purposes. Like we see a lot of digital banks are doing that, and crypto-friendly banks, what Helen referred in her presentation, crypto-friendly banks, they are all about it. They just do rather hold and sell, buy, hold, or trade or investment management opportunities. Blockchain smart contract implementation plan, if we do any digital wallet development, DeFi protocols integration, expansion on Web3 market, the, let's say, marketing strategic plan, how we're going to do this, and customer limitations and compliance. There are a lot of things to work with on this side when we're talking about integration of digital assets or digital wallets to the banking infrastructure. Yeah, here we have the examples, competitors' Web3 presence, how they position themselves, latest technology, what do they use, because they're all compliant technologies, they integrated, and yeah, what are the crypto banking opportunities in general, and yeah, target audience insights also might affect the region we'll choose for our solution. Yeah, summing up, what are the best things, the most important things from our perspective we could find out after each discovery is on product side, product value proposition, product differentiation, and product offering, as well as customer needs, their problems, pain points, market opportunities, and understanding of plans of competitors. So what our competitors are going to do. Marketing discovery gives us understanding and allows us to create go-to-market strategy, define marketing channels, project customer acquisition cost, and well, overall projections in terms of customer acquisition, brand positioning and differentiation, and customer retention strategy. Technical discovery, feasibility study, tech stack, security measures, third-party service providers, and architecture. Obviously, architecture, it's the missing part here. Obviously, the system architecture for sure. Legal discovery, compliance licensing plan, AML KYC, product user documentation, IP rights protection, and on Web3 discovery, digital assets implementation plan, blockchain integration plan, blockchain use cases selection, so how actually we will use it for the favor of our business, and DeFi strategy if we're looking onto that point. The last 2 slides I have is on what's next. After all discoveries we have, obviously, we already kicked off the MVP. After technical discovery, we're starting development the MVP. The legal marketing discovery could follow a bit later. But in our opinion, the greatest thing we could do after whole discoveries is to create strategy. Yeah, more documentation, more planning, and yeah, discovery phase, in fact, covering most of the strategic analysis part that we need. So external environment, internal environment, we've scanned the market, we've scanned competitors, we've already realized what are our objectives, we find out our target market, target audience, then we could start developing strategy, choosing how to go onto the market, actually like formulate the strategy and came up with the action plan, implement strategy, launch our projects, execute tasks, to resource and task management in general, and coming up to analysis and evaluation, which is also a part I wanted to touch in the next slide, which is the last one, about the way we approach the strategy analysis and evaluation. So basically, the way we approach the process of continuously evaluating and analyzing if we are moving properly. Does the project development going well, or what we could change to improve it, and what could be our risks and problems? And in our view, the change management that could be highly supported by the Analytics Digest, by the internal digest for your team, for all marketers or product development guys or technical guys, legal guys. When you simply, from right part of my screen of the slide, the digest market coverage, we simply define our target markets: digital banks, global finance, digital asset market. Like if we are building a local digital bank, there's some domestic news and insights on that. We collect all data sources that are relevant for us, like hundreds of our competitors, a few dozens of media, research institutions, regulators, service providers, and events that are happening within our digital bank niche, and just collect everything in brief and precise manner, just a line and link to this news. We'll be able to properly analyze the environment, what's happening around us. We'll keep ourselves updated with the competitors' plans, with the way market's moving, with the innovations and trends on the market. And by distributing this internal digest, this is basically a work for one business analyst.
Thank you, Dan. Sorry to jump in there. I think we need to start getting to the Q&A session, but I think we're almost done anyway. If there's any last remark you want to leave us with, please.
No, I guess I'll stop on that. So yeah, just as previous speakers as well, we'll be glad if you connect with me on LinkedIn, and if there is need and any questions or further potential collaboration, we'll be free to connect with you. And yeah, if any questions, sorry for such long presentation. It was going faster on the.
It was very, very enlightening and detailed. So thank you for your thorough work. And I have some questions here that we've collected. I'd like to start with Peter and ask if you could elaborate on the technology stack that's commonly used by digital banks.
Yes, sure. So first of all, this is SOA architecture, so based on microservices. And you need to pick a technology that allows you to operate in different networks. So to make one closed and secured network like internet, and some another networks, DMZ zone. So you need to rely on cloud-first technologies. So you can find solutions for AWS, for Azure, for any cloud providers, and don't try to build this from scratch just by using native development, because it will take a lot of time and money.
Okay. And do you think low-code technologies have a part to play in building secure applications?
Depend on low code, of course, like with any technology, and but you need to carefully pick low code that allows to do and to grow you with low code. But yes, we see a lot of low codes nowadays with good quality that possibly can be chosen to be a core platform for fintech, and so this will expedite development a lot.
Great. Thanks, Peter. And Andrew, I have a question for you here as well. What do you think are the potential benefits and risks associated with using cryptocurrencies within the banking context?
Well, that's going to depend on your banking partner pretty much. So unless you're using your own license, you're exposing your partner bank to the risks. So I guess that's a discussion to be had with your banking partner, as in how risk tolerant or risk happy they are. In general, unless you are using blockchain as a technology for some malicious goals, there should be no risk in using blockchain specifically in particular, areas in banking. But should you be looking to, do something which isn't necessarily aligned with the operational and compliance procedures at the banks, that's probably a risk which banks wouldn't be happy to take.
Great, thank you for your answer. And also, I think this one is probably for you, Helen. You had a thorough slide about trends in crypto banking, but is there a particular trend that you would like to highlight that you think is particularly interesting?
Yeah, it's interesting, like trend, like gamification. If we talk about startups, emerging crypto, let's call crypto bank startup. Like using gamification, or especially in marketing when it's associated with some or with animals, or with some, I don't know, like person, like in some game. Some, for example, I met with the founder of CryptoBank from Lithuania this year in Lisbon, and it was called Llama Crypto app, and it was really related with llama and all stuff that they were doing. It was, if I'm not mistaken, Epic Web3 conference. They were doing like cocktails and all like logos, everything was like connected with llama, and it's like cool concept. The same, by the way, you know that a lot of guys here, there are a lot of Ukrainians, by the way, and in Ukraine we do have like Monobank. It's not crypto bank, yeah, but it's like very like modern digital bank, and it's also related and well connected with gamification stuff, with like cats and the same tendencies in crypto bank space. Like people, they're looking for simplicity, they're looking some engagement of users. Yeah, definitely there are some stuff that I mentioned from technology perspective, like using right now more and more about in terms of security and PC stuff, like educational part, and a lot of such interesting like improving usability of users is what's significant right now. Doing all like all digital banks, yeah, your onboarding should be fast, processing should be fast, and will win this competition those banks who can provide simplicity and pretty fast processing. It's what really matter, I think, users.
Perfect. Thanks, Helen. And then we have room for one last question before everybody gets to go home and enjoy the holidays for a little bit. Dan, if you could just real quick spell out for us, what do you think is the minimum amount of research and or investigation that you should do before doing an MVP launch? Like, what is the minimum effort you should put into that space.
Right. So as I mentioned, I guess marketing is something we definitely could start much later on. Product technical and a piece of legal are the most important things in terms of legal or licensing. Like in terms of legal, we should firstly come up with the overall structure. Are we using our own license, or are we using our partners, or are we just doing a fintech platform and we'll use our banks for everything? How just Andrew showcased on his presentation. So yeah, on legal, we should find out at first the model we are working on. So are we licensing or not? On product, I would say this is something that goes 2-3 weeks before technical, and they're ending up like after, I guess, 1.5-2 months. At the end of 2 months, I guess product, technical, and this significant part of legal discovery should be done, and it will lead us to a proper development with almost all questions answered.
Perfect. All right, I think we are at the conclusion of our webinar. Unless there's any last questions that popping up from our audience, it doesn't seem like it. So let me thank
there is a question actually in the
there
chat.
is?
So
I don't know what. Oh, there's the chat. I was in the Q&A. All right, let's see here. Diana, thanks. Do you have any big banks? Do you think big banks will promote crypto in the nearest future, or is it going to be a separate sector mostly? Thank you for the question, and thanks for highlighting, Andrew.
Yeah, I'm happy to actually answer that question. I think as long as the government is going to regulate the sector, and I guess it's unavoidable, as long as this sector is going to become more regulated, there is no way the big banks are going to stay out of this industry. So if at some stage the CBDCs are going to be launched progressively in many countries or most countries, I think the big banks are going to just go into this as holders of a lot of free liquidity and always on the lookout for opportunities in the financial space. So as long as the government is gonna regulate the industry and put some ramps on it, I think that's going to be the day when the big banks are going to jump on this opportunity and going to play this game more intensely.
All right, thank you, Andrew. All right,
Also shares the
did
same
I miss
point.
any more questions? Anything from our attendees or panelists? All right, well then, thank you very much for attending. Thank you, panelists, and I wish everybody a good evening and happy holidays. Happy holidays, everyone, and thank you for joining. Thank you. Bye.
Happy upcoming Christmas, and thanks for users who stayed with us till the end.
To the bitter end. Yeah.
Connect with us and happy.
Thank you, everyone.